Good morning. Today we are going to start our class with this problem. The following particulars, please have a look at this problem. The first is the first final accounts problem. The following particulars have been extracted from the books of R. Rahman for the year ended 31st December 1990. Sales 99,330, sales returns 530, purchases 44,390. Purchase returns, please remember the slides that had been shown to you previously regarding the structure of the trading and profit and loss account. Say there was purchase, there were purchase returns, sales returns, everything is here. Stock as on 1st January 1990 at cost price means the historical cost. The stock as on 31st December, that is the opening stock and the closing stock, 8,920. Freight and duty 15,700, carriage inward 3,300, wages 7,860. Prepare R. Rahman's trading account for the year ended 31st December 1990 and then calculate the following: the turnover for the year, the percentage of gross profit on turnover. I hope you have taken a total snapshot of this whole problem, because now we are going to solve the problem. Now, here one thing I want to mention, that freight and duty in the previous slide it was shown in the net profit section, but if freight and duty is inseparable, like we say we had customs duty, that is inseparable to bringing that raw materials to that particular factory and is directly related to the production, we will include that in freight and duty along with carriage inwards in the gross profit section and not in the net profit section. If that is a secondary material, then we can include it in the net profit section and not in the gross profit section. Now we have opening stock, that is 7,540. We can see that 7,540 stock on 1st January 1990. Then you can see closing stock 8,920. Then you can see the closing stock as on 31st December 1990, 8,920. Now we have purchases 44,390, less purchase returns 710. Now this is a double column, that is one is in an inner column and then one is an outer column, 43,680. Now if you wish, you can provide it directly purchases, but within brackets you have to write less returns. You may or may not show this calculation, but you have to write purchases less returns within purchases within brackets less returns. Now purchases is 44,390, less returns is 710. So purchase less returns is 44,390 minus 710, that is 43,680. Now freight and duty, as was said previously, it is if it is directly related to the production, along with things like carriage inwards, we should include it in the gross profit account. So we have freight and duty as 15,700, so and carriage inwards is 3,300. So that has been included in the debit side as 15,000 as expenses, 15,700 and 3,300. So we have also have wages. We know wages here means wages for that particular factory. Now wages that is directly related to that factory, directly related with the production in that factory. Now we have wages here means 7,860, which is given here as 7,860. Now if we go to the credit side, please remember the gross profit structure, the gross profit account shown in the previous lectures, where we had seen that the debit side shows the expenses and the credit side, the profit and loss account, shows the income. So we have sales is 99,330. Now we have sales on the top as 99,330. Now, this does not differentiate between cash and credit sales, so you might assume that this includes both cash and credit sales. Less sales returns, like you have purchased, less returns, sales, less returns, 530. So, sales returns is 530. That is the second item in the question. So, we have sales less returns 98,800, and we have the closing stock. Now, since the credit side is more than the debit side, as given in the next, as provided in the slide with the in the net profit, with the net profit, the blank structure of the net profit items, the net profit portion of the profit and loss account. We have the gross profit here as 29,640, and both the sides are balanced at 1,07,720. Now we have to calculate the turnover for that year. What is the turnover for that year? Turnover is different from profit. Profit is 29,640. That is what is difference between income and expenses. Now, whereas turnover actually is the sales for that company, and that is 99,330 minus 530, or 98,800. Now we have the percentage of gross profit on turnover as 29,640, which is the gross profit, divided by the turnover 98,800, and the turnover into 100%, that turnover comes to 30%. Now this turnover is actually 30% of this total amount. Now what we have here, I hope you have understood this problem. Now we are going to solve our next problem. Now, during 1998, 90 and 91, a trader uh, um, um, a trader made a uniform gross profit of 25% on cost. Now, 25% on cost means 25 by 75. That is 20% on sales, or 25% on cost is 20% on sales. Now, 1992 was considered to be the same profit. That means the uh, mm, rate of profit is same. On 5th July 1992, a fire destroyed the godown, and the goods of value rupees 5,000 could only be salvaged. Please remember the objects at the lower portion of the net profit blank net profit account structure. The goods destroyed on fire, destroyed by theft, and all that. Mm, uh, mm, mm, the following particulars have been obtained from the record that could be saved. Now, when if some of you don't understand how do we calculate from profit on cost to profit on sales, we take it 25% by 125%. 25 by 125 into 100. So 25 by 125 is 1 by 5, and that is 20%. So that is how we calculate amount from gross profit on cost to gross profit on sales. Now the opening stock was, say for this particular problem, it was 16,000 purchases during the period from the opening of the financial year, that is 1192, to the date of the fire was 98,000. Sales during that period was 1 lakh 15,000. Now we are just calculating what is the asserted value of the stock destroyed. Now stock as on 25th July 92, from the records that had been obtained, was 24,000, less salvage only. According to this problem, please see the amount of goods, or rupees 5,000, could only be salvaged, and the following particulars have been obtained. Now, so the claim is rupees 19,000. This is a claim to the insurance company for the values of the good destroyed. Now, carriage inwards, we are going throughout the problem from for the period is rupees 2,000. Carriage outwards for the period is rupees 1,700, and total expenses is rupees 300. Now we are here to ascertain the value on the stock destroyed by fire, and we'll continue with that in our next session. Thank you. This is all for today.